Good morning, bulls and bears. Here's your morning market update covering the US dollar, crude oil, gold, and the Australian dollar. The US dollar remains under pressure, extending its decline for a third consecutive session. The dollar index is trading near 97.1 after briefly touching a 4 month low around 96.94. Last week marked the dollar's largest weekly decline since April, driven by heightened geopolitical uncertainty and a sharp shift in risk sentiment. Tensions linked to Greenland continue to weigh on U.S. assets despite official statements ruling out military action. From a technical standpoint, the evening star reversal pattern formed last week remains valid, reinforcing a short term bias. Momentum indicators stay weak, with the RSI hovering near oversold territory. In terms of key levels to watch, support sits at 97, followed by 96.56. A recovery above 98 and especially 98.5 would be needed to ease downside pressure. Crude is trading around $61 per barrel, supported by rising geopolitical supply risks. New U.S. sanctions targeting Iranian oil shipments, along with increased U.S. military deployment in the Middle East, have revived concerns about potential supply disruptions. Iran remains a key OPEC producer, and any threat to its exports is quickly reflected in prices. Further support comes from the ongoing shutdown of Kazakhstan's oil field, one of the world's largest, which could significantly reduce January output. Despite these factors, the technical picture remains cautious. Oil continues to trade below key moving averages, suggesting recent gains are corrective rather than the start of a new uptrend. Key levels to consider in terms of support are $60, then $58.5 per barrel. Resistance at $61.4 with stronger resistance near $62.2 per barrel. Gold continues its record breaking rally, trading near $5,105 per ounce, driven by strong safe haven demand. Markets remain unsettled by escalating trade tensions, geopolitical friction involving Greenland, instability in the Middle East, and renewed concerns over a potential U.S. government shutdown. Attention is also turning to this week's Federal Reserve meeting, with rates expected to remain unchanged. Technically, gold remains in a textbook strong uptrend after breaking above $4,780. Prices accelerated sharply with minimal pullback, highlighting the strong bullish control. Initial support is seen at $4,900, followed by $4,780 to $4,800 per ounce. Upside targets remain at $5,106, then $5,200 per ounce. The Australian dollar is trading near 0.694, holding close to a 16-month high. Strong Australian employment data has lifted expectations for a near term rate hike from the RBA. Markets are now pricing roughly a 55% chance of a February hike, rising to over 80% by May, with upcoming inflation data as the next key catalyst. From a technical perspective, the Australian dollar against the US dollar remains bullish within an ascending channel, although momentum indicators suggest conditions are becoming stretched. Resistance lies at 0.694, followed by the psychological level of zero point 0.7. Support is located at 0.6845, then 0.68. In summary, the US dollar remains fragile, oil is supported by supply risks but technically constrained, gold continues to dominate as a safe haven asset, and the Australian dollar remains one of the stronger performers. That's your morning market update. Have a great trading week ahead.